Hello traders and welcome back to Smart Money Insight. My name is Rein and today in this episode we're going to be doing slightly different because if you've been keeping an eye on the market lately, then you probably have noticed that the S&P 500 has officially slipped into the correction territory. And well, as a traders, we know that will trigger a lot of emotions from fear, uncertainty, and yes, a little bit of some excitement, I would say. But the question is that how we are going to navigate this time round and what are the strategies we should be adopting, not just trying to survive here, but how we could thrive from these turbulent times. And let me tell you frankly, right now we do have a potential of making a return of 20% or even more, but given there's a certain things, there's a certain specific requirements, especially in this coming week, that you want to take note. So in this episode, I'm going to break down what this correction really means for the markets, what are the opportunities lies ahead, and how we could adjust our trading strategy to stay ahead of the market. So whether that you're trying to protect your portfolio or you're trying to eye some potential gains from the stock markets, and I would say that this podcast is going to be packed with actionable insights that could really make the difference for your trading portfolio. Let's dive in on how to make the most of the current market conditions. If you look at the S&P 500, I would say recently just entered into a correction territory, and as of March 13, 2025, this index closed around 5,521. There's a huge drop, reflects about 10% plunge from its record high of 6,144 set few weeks earlier from this 19th February 2025. And I would say that this pullback mainly driven because the rising concerns over the Trump aggressive trade policies, which has really sparked inflation fears and worries about the economic slowdown. Let's try to understand this term of the correction territory. If you do a quick research on the internet, that will tell you a correction usually refers to a decline about 10% or even more from the recent peak of the major stock index like Dow or the S&P 500, and this I would say typically a short-term decline, and that can affect individual stock sectors or even the entire market. So when we use the term correction territory, that usually going to be the drop between 10 to 20% from the recent high. The other term here is going to be the bear market, usually when it declined more than 20%, where we call the bear markets, and usually this presents for a prolonged and a more significant downturn. So now what we are seeing here is that the correction is impacting to over the major US stock indexes like Dow Jones, for example. 30th of March, Dow has dropped about 1.3%, and that's putting roughly about 9.4% below its recent peak. And talking about Nasdaq Composites, well, it fell by 1.96% on the same day on 13 March, and right now is down over 14% from its high. So Dow and both these Nasdaq also officially entering for correction territory, I would say. So what does this all mean? Are we really heading towards the bear markets? Let's put this into some historical context, and let's pull the S&P 500 back since 1929. The market since then has entered into correction territory about 56 times, which is defined as a drop of 10% or more. As you can see from this graph, that the most recent one was between July and October 2023. Out of this, the whole 56 times of corrections, only 22 only 22 actually morphed into the bear markets, where the decline exceeded 20%, and the rest, 34, did not actually turn into the bear market. So I would say, historically speaking, only about 40% chance we really go into the bear markets, but 60% chance, well, we're going to be away from the bear markets. So I would say that not all hope is lost. Right now we have entered to what we call a correction territory. The question is what we should be doing with our trades and portfolio, particularly with our US stocks holding. I would tell you that right now I do have some data, I would say very exciting and interesting data, because this data will show you that we do have a potential to make 20% return or even more, given you do have the right interpretation. And let me explain that. When you look at this table, the leftmost column in this table, it shows entered corrections date. So for example, on June 26, 2008, when this S&P 500 officially entered to a correction territory, 1 week after that, the index has lost 1.6%. And after 3 months' time, it was down 5.5% and so on. What we can observe from this table is that the US market has generally been so bullish. Even after the index entered correction territory, it tended to perform very well after 1 year, except only two, the correction in the 2008 and also in 2022 over here. Let's dive deeper into the data by sorting the rows according to the magnitude of the S&P 500 return after 1 week time, from the largest to the smallest. And let's break the table into two parts. This is where the thing is becoming very seriously important that you want to take note, alright? When you look at the first table over here, this highlights the corrections period for the S&P 500 returns that was positive during the first week. On this table, the second table, focuses on those corrections where the S&P 500 returns was a negative or zero in the first week. As you can observe yourself, what we find that the average return here, the index 1 year after a correction with a positive 1 week return, is apparently 20.54%. While the average return of the index after correction with negative or 0 1 week return is only 2.72%. I would say that this is really a valuable data for you to consider as we move forward. Next week is going to be a very important week. It's going to be a critical week for traders and investors, because it's really depending on how is the performance of the market, be it a positive 1 week return or a 0 or negative 1 week returns, that could potentially determine your potential gain, either potentially 20% here or just potentially 2% return. So really depending on how the market moves next week. And that is all I have for this episode, The Smart Money. If you find this insight helpful, then please do not forget to like, subscribe, and hit the notification bell so you will not miss out any good trading opportunities again. And also be sure to share this video so let others know that you care also about their portfolio. Till then, trade smart.